Good day, everybody. Happy Saturday, and welcome back to Markets for Millennials for the market wrap of the week ending from November 1st to November 5th. And this week, I'm starting out here with a look at the different equity indices in different colors. The primary view here is of the Russell, and I'm starting out here because this week I think with the FOMC news, we had that big news event happening where the Fed announced the beginning of their taper here in November and December. But the real story to me is that the Russell broke out finally, and all of the indices are marching into new all-time highs. Now I'm showing you this here. I've got the Russell in white. I've got the Dow in orange. I've got the S&P in blue and the NASDAQ in yellow here. And the reason I'm showing you this is because I've talked about this quite a bit in a lot of my videos, um, that this sideways consolidation that we've been seeing, again, the Russell making new all-time highs for the first time since March 15th, um, that it was interesting to me, and I was weighing two potential scenarios. The first one being, what if the Russell sideways and not confirming new all-time highs with the other indices meant that the other indices were going to see a 10 to 20% correction. Um, and it started to look like we were going to get a decent correction if you're seeing what I'm doing on my screen here on the kind of the top right. We did have a sell impulse on three of the indices while the Russell was continuing sideways, but then that has since recovered and we're at new all-time highs again, including on the Russell. But what I did was I took a step back and I thought, okay, where have we been since the March crash? And over, in the first, I want to say 6 to 8 months post March 2020 crash, the Russell was underperforming, and then you had this period of time between November and uh, of 2020 with the election, and then March of 2021 where the Russell just outperformed like crazy. And then the Russell has been sideways since then, while the equities have been marching up. And the view was that either the Russell was taking a pause, and then the equities, the other indices, were going to correct, or the Russell was just on pause until maybe the market was thinking that during this period of time the Russell had outperformed so much that the Russell needed to take a break while the rest of the indices caught up. Interesting view, but that seems to be the thing that is prevailing. And so I think that that's a really huge deal. Now, in talking about the FOMC meeting, um, I think a lot of people were surprised because people have been talking for months about, oh, the Fed can't taper at all because they'll crash the markets, and that's not what happened at all. And I think as I excuse me, as I look at the other indices, and you can see here we had this really awesome, I had this line here. I had an original line of repair, something like that. It's obviously not perfect, but that was a line of repair. But then I had been saying that this is the true line of repair. It's a lot more shallow than it was on the S&P and on the NASDAQ, but you see we got a perfect breakout, retest, and resumption off. Um, and obviously got above the overhead all-time resistance, or all-time high resistance as well. But I think what happened with the FOMC meeting is, the markets like certainty, and they did exactly what they said they were going to do. And while I think a lot of people were expecting the markets to fall, at least for a time, as a result of the FOMC announcement of the taper, that clearly didn't happen. And I was saying it on Twitter, the markets, because they got that certainty, there was no surprise at what happened. The market got exactly what it expected. And so as a result, the markets are just, trudging along. At least they know now there's no uncertainty over the next 2 months. And if something does change, more than likely it's going to be a reversal of that taper, and maybe they'll instead do more QE, more purchases, and things like that. So here again, you see the melt up on the NASDAQ. You saw that this was our previous sell impulse that had happened, and we've obviously recovered that and made new all-time highs. Um, Here we are on the S&P. We got a perfect breakout and retest of this. I had the line at the top of this green candle. and we got a perfect retest of that on this daily closing candle and have resumed up since then. And so here on the S&P, I've got kind of this channel that I created because I previously had, this is going to be really messy, but I kind of had this like wedge, um, and we broke down out of the wedge, but then we have come back up. And when we made this low, what I did was I changed my line from being more of like a wedge to now I created this channel, and you can see that the channel actually works pretty well. There was a period of time where we were slightly above the channel. And so what I'm looking at now is I'm looking to see if we get rejected off the top of this channel, or if we can bounce above it. And if we do bounce above it here on the S&P, then that's going to be actually, I would say, not really bullish, more actually concerning to me, uh, because to me that is a sign that that stocks are melting up a little bit too fast, a little bit too hard, and we might actually then get a correction. Again, I'm not saying we will, but I'm just saying that that would actually be concerning. I would not be chasing this momentum right now at all. And then on the NASDAQ, I think the thing that's interesting is, and I messed with this a little bit, so I'm going to have to pull up my object tree for a second. There's two ways you could look at this. So I have been for a long time looking at this channel, um, which has connected these kind of these lows. And this channel, actually, the bottom of this channel tracks really well the 50-day moving average. So those of you who are into moving averages, that shows that this is a good line, that the market is respecting that line. And cloned, you can see that it provides resistance at a lot of different occasions, and support at a few. So we've just popped above that, as you can see here, on the NASDAQ. And but the reason why I'm saying that this is kind of an interesting situation to be in, as a in terms of TA, is that depending on how you look at this, some people have already kind of thrown out this sort of channel, which is what I'm showing you here. Um, which, you could then maybe take this line and clone it and attach it to the kind of the top of this high from September 2020, and then that would provide another line of resistance. But a lot of people have abandoned those lines and have now made this line, which actually connects the top from September of 2020, and then from February of 2021, and then from September of 2021. And if you drew that line, then we've now popped above, closed above, retested with a wick, and have closed a little bit higher. And so I'm going to be watching the NASDAQ to see what the market is actually choosing to respect. And it may take a week or two or three to really get that figured out. It may take us a couple of days to touch this line, and then again, if I clone this to match the high here from September 2020, then that line will then be a little bit higher. So it could take some time to test, but that's what I'm watching for on the NASDAQ. So equities, again, I'm not chasing the momentum. I don't recommend you chase the momentum. Probably the best moves, the most clear moves to take would have been this retest and resumption of this broken line of repair on the Dow, and then obviously the breakout of the Russell. To me, again, looks like the best trades that have taken place, and maybe perhaps this S&P retest, but that was actually not this over the previous week, but the week before that. Taking a quick look at the DXY, also on that news, we actually got a, let's see, that was on Wednesday. So we actually, the dollar didn't actually move any significant direction, which was interesting, I think. So it was down on that, and so I actually brought back this trend line that I had put in previously. I kind of, got rid of it after we retested it right here on October 4th. Because I thought that what the market was respecting was this overhead channel. But it's really interesting. We've got a lot of things going on here. I'm not sure if I want to keep this. I'll hide it for now. That was a line of repair that it looks like we have retested. And it looks like we've even closed below it, but I'm not certain. So I want to hide that for now. But we've had the market kind of playing with this trend line right here. We're still in the channel. The market is has yet to get above this really key level at 94. It's approximately 94.70, which I think is, I was actually expecting with the taper, um, that when they actually announced the taper, I was actually expecting the dollar to go up above this trend line, to go up above this trend line, but it obviously didn't. So it'll be interesting to watch the DXY over the next couple of days, to watch this area right here to kind of see where the dollar is going to be. But again, helpful to remember, the dollar index is, it's a basket of other currencies, with 50% of that being the euro. So it also depends on what the ECB is doing. Now, you're seeing a little bit of divergence in what different central banks are doing. Obviously, um, uh, the Fed is tapering a bit. You saw huge tightening happening in Canada. The ECB kind of talked about tapering and tightening, but they didn't really do anything different. They just said that they were willing to. Um, the Bank of Australia basically said that they were going to keep the status quo and they were not tightening. So a lot of different things happening in terms of the currency markets. So I'm kind of holding sway on the DXY for now. Yields have come down though. After moving up during the announcement of the taper, they have now, we had this huge engulfing candle the day after, and then a lot of follow through to the downside. So even with the taper, with the taper, rates are coming down, at least so far. So I'll be interested in seeing, I drew a line of repair right here. I'll be interested in seeing if we stay right around here, or if price actually ends up coming back up on a quick recovery. Um, and so that's what I'm going to be looking for there. Gold and silver had a pretty good, last 2 days of the week, ended up green on the week. So I'm going to adjust some of these lines here. I didn't do that previously. Um, so we've got a number of different things that we will want to watch for on gold and silver. Gold above this line of repair. If you're optimistic about gold, then you're glad that we got the move up. I'm going to delete this line right here. Gold's still not interesting though. I want to see us get above 1830 before I start kind of thinking about um, gold keeping its upside momentum. But what you do like to see, which you are seeing here, is you've got higher low and higher low, higher high, higher high, higher high. Those are all good things to see for gold. So that's good. Um, and then silver. Silver is a little bit of a different story. Silver did close barely above this support level at 24.10. But it has yet to retest, or to truly get back above this line. It was a broken trend line, came down. So some people might look at what's happening right here. If you were just doing normal TA, you would be looking at this as, okay, it's coming in for the retest of the breakdown of that trend line. So could silver move back down? I'm not really certain, but similar to gold, we are seeing higher low, higher low, higher high, higher high. So if we can get another higher high, then that's really good for silver's momentum. And so that's what I will be looking for on the precious metals. And then finally, Bitcoin. A lot of people, so in the last 2 weeks, I didn't do an update last week, but in the last 2 weeks, after making the all-time high, we have been stuck in this range, and the range has been getting tighter and tighter. You can even see if I zoom in, these wicks, even if you include the wicks, the moves are getting smaller and smaller and smaller and smaller. And even just right before I started recording here on Saturday, Bitcoin, which had been in the red most of today, has now turned green. And so what I have here highlighted are these yellow descending lines. These are from the most important trend line in crypto, which we created back in May of 2021 this year, when we had obviously our big rolling top and sell off, the 53% drawdown. And so what I've been doing on the way up, just kind of quietly cloning these trend lines. I'm not sure if you could see, but there are some more faint lines that go in the back. I've only got the ones darkened that I have thought have been the most important. Um, but you could see that the most important trend line in crypto has been literally perfect here during this consolidation. We tapped it. That's where I put the line as soon as we tapped that, and then we had the sell down. Um, and it has played as perfect resistance right here on November 2nd this week. And so this is the line of repair for me. And so if we can get above that, then it will again, I think, as soon as we get above this line, then it'll be a day or maybe two before we just shoot up and make new all-time highs again. And again, my long-term picture on Bitcoin is still bullish. I think, if I kind of squeeze this down a little bit, and if I can, really quickly try to get rid of my most important trend line and crypto lines, um, if you just look at, how far we've come, I'm looking again for Bitcoin to really take off sometime over the next week, and then ultimately looking for Bitcoin to be somewhere in this range, to move somewhere into this range before the end of 2020. Price target between 153,000 and 253,000, or I'm sorry, 193,000 to 253,000. So that's my look at the markets. Apologize about getting the video out late, and also for not getting a video out to you guys this last week. But I hope that this has been interesting to you. Go ahead and like and subscribe and share if you learned something. Send it to somebody who you think would find the view of the markets helpful. And once again, thank you, and I hope you guys have a great weekend, and I'll see you guys next time.